if you think about this from a leading indicator perspective, core PPI appears to have bottomed at a level that is inconsistent with the Fed's 2% stated inflation target. And this has been our view the whole time. You going back to when we introduced our Hope Plus I framework analysis 2 years ago, even prior to that, when we introduced our secular inflation model at the beginning of 2022. The conclusion of both of those analyses was inflation, unless we go into a recession, is not going to bottom at a level that's consistent with 2%. Now, we've long been of the view that the Powell Fed is essentially implementing a regime change in terms of the Fed's inflation target. They don't want 2. They want something higher than 2. They're clearly comfortable with something higher than 2. I mean, if you go by the end of this year, we're talking about, 21, 22, 23, 24. That by the end of next year, if they don't get inflation back to 2% sustainably by the end of next year, that's 5 years above a 2% target. And so on a de facto basis, they could just be accepting much higher than 2% inflation, which if they don't do anything about that, then that's structurally bullish for risk assets and structurally bearish for defensive assets like bonds and the US dollar. And so that's been our longer term view. But again, that view doesn't necessarily have to be priced in every moment, it's based on where we are in the positioning cycle. So if that view becomes the dominant view and just dominates markets between now and end of the year or into 2025, and the market regime doesn't change, then your portfolio shouldn't change. Your portfolio should change because the market regime is changing. And we try to help you proactively prepare for market regime change. But again, we're not going to change our portfolio, and we're certainly not going to change anything we're recommending to you unless either KISS changes or the discretionary risk management overlay changes. That is our communication to you in terms of what we think you should be doing in your portfolio, and everything else we say when we're talking about growth, inflation, policy, positioning, and all the other things that we do on a daily, weekly, and monthly basis for you here at 42 Macro. All that stuff is designed to help us try to anticipate the evolution of the market regime. But the reality is, even if we're wrong at what we're trying to say in terms of the evolution of the market regime, you shouldn't be making changes in your portfolio unless our risk management signals vis-a-vis KISS or our discretionary risk management overlay change. So I just want to make sure everyone's aware of that in terms of how to interpret our research and help you maximize upside capture in bull markets and minimize downside capture in bear markets. Getting back to this chart. So this chart here shows core PPI with core CPI and the core PC deflator. The blue line is the PPI time series. And so we see, as you can see here, it's essentially bottom. Now we're starting to reaccelerate against cascading of easy comps over the next couple of years. And so as you can see, this level, we bottomed at 2%. We used to bottom at 0% in this time series. We'd oscillate, let's call it from 4 to 0, and the average of that was 2, or let's call it 0 to 3.5, and the average was something slightly lower than 2. Now, if we bottom at 2, the average is going to be something that's much higher than 2 if we start to reaccelerate. We're not going to get back up here. Obviously, there's a lot of supply side issues there, and obviously the fiscal monetary largesse we saw in the pandemic aren't going to be repeated. But if the time series starts doing this at a level that's not consistent with 2%, then I think structurally we're going to have an issue in terms of asset markets not knowing how to deal with that. But ultimately, we think the destination of that process is, okay, well, this is a Fed that we're frogs being boiled alive in a pot of water, and the Fed wants easy financial conditions in perpetuity because ultimately it understands that this is the J. Powell Fed that will not sacrifice the economy because to not sacrifice the business cycle just to get inflation to this sort of random, arbitrary 2% inflation target. And I think we're going to hear more and more about that discussion as we progress throughout time over the next year or two.